Hi traders, this is Mike Hamilton. Welcome to my video. Are we bearish or are we bullish? This is the Dow on a weekly chart. And you can see this incredible channel I've marked up since quantitative easing in '09 down here. And a normal bullish cycle is round about 5 years. So we are 6 years into this bull market. Now, lots of pundits out there saying we're in for a big crash, we're in for a big correction. Well, are we? Well, if we close above this level here and hold that level, we are going to go to the top of this channel and possibly higher. So that puts us around about 19,000, and we could even bust up to 20,000 at some stage over the next 12 months, 6 to 12 months. And at that stage, I mean, if I was the Fed chair, I would do a rate rise in June, but I would do a 1/10 of 1%. So absolute nominal amount of rate change, which I think would initially give a little jolt to the market, but I think that pullback will get bought. That way, you drip feed a rate rise into the market, and the market can absorb it and move on. But let's see. Let's see what they do. In the meantime, I think this has got the potential to absolutely bust up. You can see I've got this trend, this more localized, apart from the big channel. If you look at this red line here, we've come along here, we've held this support. It was a stopping bar 2 weeks back. Yeah, an inverted hammer, and then okay, this bar's not closed yet, but we're butting up against this highs. This market is not prepared to die. However, coming to this in either the end of this week or early next and fail, then I will want to get short. But in the meantime, just keep buying pullbacks if you are trading this Dow index, and let's see where this one wants to go. And I want to explain myself on one chart I called in the room today. I called along on the pound Aussie dollar. Now this thing's been seesawing these last couple of weeks to quite an extent. But what I'm seeing in this chart is huge trend line, 3 very good Fibonacci waves, very clear, distinct waves. I think this is a massive squeeze. I think it's a massive ball squeeze. Okay, close underneath last week's low and it's toast. But I'm taking a small position. I'm slightly underwater here. Could have got a better price if I'd held out for a better price. But I've got a small position with a big stop, or bigger stop than some of the trades I do. Intraday, that is. And if we can hold this 150 into tomorrow, or ideally close above 200, I think we are going to see quite a spurt in this one, in the pound Aussie dollar. But that's why I bought it, because if you look at the 60-minute chart, so let's drill down. Let's look at the daily. Let's really drill down on this one. You can see is this key fib level that we keep holding. All this price action over here. Whoops, didn't mean to do that. All this price action here was later used to propel this up to that side, and we're currently in that sort of region as well now. So this is a key area for the pound Aussie dollar, and if overnight and into tomorrow's UK jobs, the market decides it likes this price and is prepared to buy this, then I will sit on that and add to it as time goes on. In the meantime, it is a counter trend trade, but I'm not risking much, and I'm happy to sit in that. Look at the 60-minute chart, and you can see what I'm looking for is a repeat of this kind of cluster down here, generated a nice big push up, and we're holding this fib level. We just had a stopping bar above this fib level, just narrowly under my entry point of 154, and looking to see if we can close above the box 192, 180, and then push up. So if we open and close above the box, then I'll buy more, and then see if we can push through this resistance area. But I'm flying in the face of two legs down, but just looking to see if we can cluster here, find some support and push back up. If not, nothing very much is lost. So I'm banking on UK jobs holding this up and delivering a good move. Okay, so let's just look across the charts then. I've seriously underestimated the weakness in the dollar today. I took a short. I think I got about, at one stage I had about 40 points to the downside on this one. Took it off for about 25 points, and what I've missed is I've missed this little stopping bar here. It's closed above it into towards the US session. And we started the sell off this 50%, so we spent 2 hours dropping back on that 50% after the Dow open. They closed above it and then yanked it up, so that's still holding up well, and so we have a very weak dollar. So when it came to the US dollar yen, I bought 119, moved my stop up to break even, and it sold off, so I'm staying out of it. Yesterday we held the 50%. At the moment, as we in the last hour of the Dow trading, we are sitting back on that 50%. Right, and what else have we got? So let's, for tomorrow, it's options expiry tomorrow, so I will be looking at the pound around the jobs data, and then not doing much for the rest of the afternoon. Probably even if the weather's good, probably make the most of the weather. Options expiry is, once you've got all the data out of the way, it's one to be missed. Just trying to recap what data we've got on. The UK jobs is up past 9, expecting a better figure. Unemployment rate dropping to 5.6%. We've got Canadian retail sales. Now I hope that is a poor figure, because I'd love the CAD yen to come down, but it's just raced off and given very, very shallow pullbacks today, so that's a shame. US inflation tomorrow, and consumer sentiment. Okay, so back to the charts, and this pound yen looks, again, UK jobs tomorrow, it's a pullback to 177 is a potential. I'm sitting in that pound Aussie as discussed, and the pound US is almost up to 150 already. So any pullback to that is to be bought, and we've got a pullback area of 149.25 if you see that in the Euro session. Otherwise, gold is around the 1200 mark. There's a clear sign that there's a massive option expiry on that. The oil is We're actually on the June contract now, so I would very much like a pullback to this 54.50. So with the new contract, I am hoping that's going to give it to me. Alright, that's all I've got for you. So take it easy tomorrow with the options expiry. If you are going to trade the markets, I would suggest you wait till all the data is out of the way, 30 minutes after the Dow open, and then see where we are. Otherwise, I would be staying out. Hope that helps, and look forward to seeing you in the trading room. Bye for now.